Welcome to Banfield. I'm Brian Enton in for Ashleigh tonight. Bad news is coming, but how bad will it be? Tomorrow, the Consumer Price Index report will be released for the month of March. It is the thing that measures just how bad inflation is. We've all seen prices going up in the stores, but you might not realize how high they really are. In February, prices were up 7.9% from the year before. Experts think the March report will be even uglier, with prices up as much as 8.5%. That would be the highest overall inflation rate since 1981. Think about that. You are spending nearly 10% more on everything you buy: groceries, gas, and electricity. It would be okay if our paychecks were going up too, but I think you know they're just not. Americans are paying higher prices but making the same amount of money, and it is not going unnoticed. For the third consecutive month, U.S. shoppers say they are pessimistic about the economy, with consumer sentiment at an 11-year low. So what can be done about it? Well, the Federal Reserve plans to raise interest rates. Analysts expect the Fed to raise them by 0.5 percentage point in May and maybe another 0.5 percentage point in June. They hope that that will be enough to, quote, cool off the economy by encouraging people to save their money and hopefully finally bring the prices down. But it'll also make it more difficult for Americans to take a step up the financial ladder. Higher interest rates mean higher mortgages, car loans, and credit card rates. That is going to be tough for would-be homeowners. Last year, a 30-year fixed rate mortgage was under 3%. Now it's over 5%. Home prices, they are just not helping either. The price of a home is up 32% over the past 2 years. Buyers didn't feel the pinch when mortgage rates were low during the pandemic, but now that really hurts. So what are you supposed to do? Move your money around and be aggressive, or keep your head down and hope that it blows over soon? Fortunately, tonight I am joined by two people who know what all of this means, because, gosh, it can be complicated, and exactly what you should do about it. Kathryn Tuggle is the Chief Content Officer of hermoney.com and the co-author of the book How to Money. And George Kamel is a personal finance expert and the host of the Fine Print podcast. Kathryn, I want to start with you. All of us think about this every day. The price of everything is going up. If you want to buy a house, so many people can't afford it. You want to go buy a car, they're not available, or the used cars are so expensive. Gas going up, groceries going up. Tomorrow, the big announcement. Do you think that things are finally going to go in the right direction, or is it just going to get worse?
Look, I think we are headed for high inflationary times. I do not think that housing prices are going to come down anytime soon. And I think that mortgage rates are just going to be on the rise. But, I would just encourage everybody to just take a breath. Calm down. There is no need to take action. I think we all have this human instinct to take action, to do something when we feel that inflationary leak to our spending power. But, I've heard so many reports, as I know you guys have, of people paying $200,000 over asking price for a house. This is crazy. It would be so much better to pay 7% mortgage on a house that is $200,000 cheaper. So I think the most important thing we can do right now is just to keep things into perspective. If you have a car that's still getting you from point A to point B, don't do anything. Don't make any changes. Live as if we are in a recession before we get to that recession. I think so many of us who lived through 2008, we already know how to pull back. We already know how to save money. And I would just take a deep breath and a step back and look at everything from a 360-degree point of view.
Yeah, it's good advice to stay calm and to take a deep breath, but obviously it's just so worrisome when you're getting the same paycheck every 2 weeks, but the cost of everything is so much more expensive. George, Fed raising interest rates, another raise expected. Do you think that's really going to help? It just seems like there's so much more going on besides these interest rates.
Yeah, this strategy has been used in the past with success. So I am an optimist. I think this could definitely help with some things, because when we raise these rates, we're going to see the demand go down, which could help with inflation. And as much as I want to be an economist and a fortune teller, I'm not. And so what I can do is control the guy in the mirror. I can start to get on a budget. I can be on a written plan. I can start to dial down all of my unnecessary expenses, sell things, maybe go get another job temporarily to bring in some extra income. Those kinds of things will really help you create that margin in your money.
And Kathryn, you mentioned people paying way over asking price. I mean, it is insane when you hear about some of these offers. For people at home who have saved some money, want to buy a house, are sick of renting, do you suggest waiting at this point?
I think waiting is a far better option than feeling pressure to make a move and then ending up house poor for the next 30 years. You know, things are going to change, and you can take that money that you've so diligently saved for a down payment and you can put that into an I bond. You can put that into a high yield savings account so that inflation isn't eating away at your money, and you can just be patient. You know, don't feel the pressure to waive an inspection and pay far above asking just to get a house because everybody else is getting a house. It's okay to sit back and take a breath. You know, we all know real estate is a wonderful asset. It's a wonderful asset and investment for your future, but getting into a house that's not quite right or getting into a house that is overly expensive, that's not a smart investment.
George, let's talk about credit cards because so many of us have credit card debt. I was reading this crazy statistic. In 2021, credit card usage was up 25% over pre-pandemic levels. Is now the time to pay off your credit card debt if you've got some extra money, or is it best to wait?
You know, in my book, it's always a good day to pay off your credit card debt. I'm a big fan of becoming debt-free and staying debt-free. And this is the time to do it, absolutely, because we're feeling the pinch. When you're living paycheck to paycheck, with 78% of Americans are, it's because of things like consumer debt. And so the faster we can get rid of credit card debt, we can start using our debit card and using money we actually have, the better off we're going to be. And people following the Ramsey plan, they pay off all of their consumer debt on average in 18 to 24 months.
Kathryn, let me ask you this. I've got this buddy who is a money manager, and he was explaining something to me the other night that just sort of like made my brain explode. He was explaining that if right now you just keep your money in a savings account, because of inflation, you're losing money. So you think you're saving money, but you're actually losing money every day, every month that goes by. Can you explain that? And what are your thoughts on savings accounts right now?
So you are saving money. First of all, if you're saving money in a savings account, you're saving money. But we know that inflation is a slow leak to our buying power. So if you're earning $1 today, inflation is going to make that worth 80 cents in a few decades. But that leak to your power, that substantive leak that he's talking about, losing money, that takes decades, right? And we all need money liquid. The worst thing that anyone can face right now is to have to draw down our investments in the stock market because we don't have enough cash to pay for our daily necessities. So having money in savings is not a bad thing. You have to have enough liquid to support yourself. But if we only have a savings account and we don't invest in the stock market where we can see averages of 8% returns every year, that's a mistake. That's why investing is so important for our long-term financial futures in our 401ks, in our IRAs, in our brokerage accounts. But you have to have a mix. You have to have a mix of savings and a mix of investments.
Makes sense, yeah. And I think in this time of uncertainty, a lot of people just feel more comfortable putting it in a savings account right now. I know at least that's how I feel a lot of the time. Let me ask you this, George. Over the weekend, I sort of had one of those weekends where I watched a lot of TV, and it seemed like every other commercial was someone on TV telling me because of these uncertain times that I should buy gold, buy gold, buy gold, buy gold. Is this just sort of like a fad on TV, or is someone making money off this, or is this actually a good idea right now?
Well, someone's definitely making money off of this, and it's not you as the investor. I am not a fan of investing in precious metals as a hedge against inflation, as a hedge against the dollar. What we've seen in the last 10 years, the rate of return on gold is abysmal. I mean, it's 3.7%, while the stock market averaged 12% over the same amount of time. So if things really go down and the dollar collapses, we're going to be wanting to barter for things like gasoline and ammo and food and water, not a bar of gold. So it's a commodity, it's super volatile, and I don't want you putting your money on that roller coaster. Avoid the ride completely.
Good advice, because we all see the commercials all the time, it seems like. Kathryn, let me ask you, there's so much bad news that we hear about the economy every day. It can be so depressing. Are there any sort of tricks right now that you know about? Are there ways to actually make money in an economy like this?
Well, we know that the hiring market is better than it has been in quite some time. We're hearing reports of people increasing their salaries by 20 to 30%. If you are looking for a job, I would say get your resume refreshed and don't be afraid to get out there. And there are some shopping hacks that we've seen people use with good success. Start with the cheapest stores first. Don't go to Whole Foods first. Don't go to the gourmet market first. Start at the dollar store. Start at Aldi and see what you can knock off your list from the cheapest possible retailer. And I know that we all fell into the comfort of online shopping during the pandemic, but online shopping is quite often more expensive. It's quite often more money to order things to have it shipped to your door. So if you are fully vaccinated and you are feeling like getting back out there again, don't just add to cart haphazardly. Get out there and get back into the store and see what kind of deals you can find.
Yeah, I think we've all sort of gotten used to the convenience of things that we got used to during the pandemic. But even like Uber Eats, that kind of stuff really does cost so much more. You can save yourself a lot of money.
So
George,
much.
my final question for you. So many people living paycheck to paycheck right now. We mentioned they're getting paid the same, but inflation has been going up. If you feel like you just can't save, I mean, you put your money towards the bills every 2 weeks and there's just very little left over. How do you get out of that? I mean, what's your advice?
Well, the best thing you can do is look at your reality. Look at all of your bank transactions and start to do a budget. Your income minus your expenses, I want it to equal zero, meaning you've given every single dollar a job. So once you have all of your expenses in your budget, do a budget audit. See every single area you can shave off a few dollars. Maybe it's shopping your insurance and getting some better premiums in your life. Maybe it's cutting out those expensive grocery stores like Kathryn mentioned and shopping at Aldi. Anywhere you can shave off those expenses, it's going to feel like you got a raise. So that's the number one key I would tell people is get on a written budget every single month and stick to it.
Yeah, it certainly does seem like every little bit helps when you add it all up. Kathryn and George, thank you so much. Those were amazing tips. Thanks for being with us tonight.
Thanks, Brian.
Thank you.
Thank you for watching. Click the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.